If you're using a payroll company, most likely everything's going to work out. But one of the things that we see is that companies that run into cash flow problems sometimes tap their payroll taxes and say, I'll pay it later. That is one of the worst things that you can do.
This is the PMP Industry Insider Podcast.
Hello, everyone. Welcome out to another episode of the PMP Industry Insider Podcast, where we look at what is changing in the industry, and we take you to the front lines of those that are driving those changes. As always, I'm Donnie Shelton, owner of Triangle Home Services, which has Triangle Pest as well as Triangle Lawn. And with me is the ever-present, ever-looking, and ever knowledge expanding in the realm of all things accounting, Mr. Dan Gordon. Reigning from the north, I have to bring that up yet again in our episode here. He is in Jersey, back where he belongs. And with that, Dan, say hello, introduce our topic, and let's get rolling.
Yeah. Hello, everybody. Dan Gordon, PCO Bookkeepers, PCO M&A specialists. And when you say I belong in New Jersey, is that because I have a bad attitude, or like, why would you?
You got Jersey all over you, Dan. Just don't, you just got to embrace it, man. It's all good.
No, I definitely embrace it.
What's really funny is when Dan gets angry, that's when it all comes out, which is kind of funny.
I was watching TV the other night and I saw My Cousin Vinny, for anybody who and Joe Pesci with the two Utes. I know
that's right. The two Utes is
thing, but it could be a New Jersey.
It could be. Yep.
Anyway, great to be here. And our sponsors, Coalmarch by WorkWave for digital marketing. Visit them at coalmarch.com, as well as our new sponsor, PestSure. If you are looking for general liability, workers' comp, auto, whatever else you have in your business, give them a call. They are specific to the pest industry, and we have lots of clients that use them. So anyway, today what we're going to talk about is areas of exposure for tax audits. Or
hang on. For all of our listeners, if you don't have a seatbelt on, boy, you better put one on, because this is going to be, man. Yeah.
So Donnie wanted to name this the top 10 ways to get audited as opposed to avoid it.
That is true. Top 10 ways to get audited. Yes.
Yeah. So there's so many aspects to an audit and so many different things that you can be audited on. And so we're just going to pick a few today. But in a tax audit, there's several common risks that businesses should be aware of. They usually revolve around potential errors or things that you do on purpose in the collection, reporting, and remittance of taxes or filing of returns. I actually had a client that we went through an audit, and he owed the government about $250,000. And I thought that, well, he won't be a client for much longer. And we talked about it, and I said, are you happy with, I paid a lot of money. He goes, oh, no, Dan, it was great. Had I done everything right, I would have owed $1 million. So I was like, okay, great. So anyway.
Well, hang on. Before we get into this, just a few things. Yeah, I was going to say a few things to just talk about before we get into this. Number one is, I know for me personally, I've been through a couple of audits. Actually, I think I had 4 in 1 year. It was right at my 10-year mark. And I remember Dan saying that, the 10-year mark is in a certain revenue, like it's pretty common to get one. I had a use tax audit. I had a workers' comp audit. I had a federal audit, and I had a state audit.
You automatically get it. Workers' comp you get every year. So
yeah. Well, long story short, I just remember thinking, my gosh, man, what in the world did I do? But the reality of it is this: is that number one is that just realize there may be some things that are going to kick off an audit that you may or may not have any. Maybe I did something that year that got me targeted. I don't know. I think it was just the time I've been in business. Number two is, I would say, look, most business owners, entrepreneurs, they're not the risk adverse type. This is one area where I personally, like, if you ever fly with me, like, people make fun of me all the time because outside of an airplane, side by side, our car, whatever, I am all adrenaline, all about the risk. But once I get buckled in, it's like I'm totally different, right? I'm Mr. Safety. I would say this is one of those areas of your business where you can take risk and you can take the chance and you can roll the dice. This is not one area that's for that, because I can tell you right now, if there's anything that puts you out of business in a hurry, it's the IRS. And so with that, though, my disclaimers are out. I don't, not to say I don't take any risk at all, but I don't mess around when it comes to this, because I've seen people screw this up and get behind, and then they get into a place where they can't afford their taxes. And then they're in like this death spiral, right? And they can't get out. So with that, I'm going to turn it over to the expert. I am not a tax expert.
We're going to discuss 3 types of tax audits today. We're going to do income tax audits, payroll tax audits, and sales and use tax audits. There are other ones you could have, we've seen pension fund or 401k audits. Usually, if you've got a 401k, you probably have a third-party administrator who's doing any tax work, so they're usually responsible for it. We don't see a ton of that, but we do. But the 3 that I mentioned, those are the biggies. So an income tax audit is basically there's really 3 ways that you can get audited. Number 1 is when you submit your tax return. On that tax return, you identify yourself with a business classification. So they kind of, your business classification is lawn care or pest control, right? And so they keep stats and ratios on certain things on the P&L of your of your income tax return. And if your numbers stray too far from those, that you can get an inquiry. The second kind would be, so that's just a computer generated, hey, your numbers don't look right. Let's go check them out. The second type is you could have a whistleblower, somebody who turns you in, usually an ex-employee who you're probably pretty good friends with. And the third one is just a random audit. And random audits are somewhat rare, and because the IRS is so stretched, it's kind of interesting. If I were running a government, I would want like in business, my salespeople, those are my revenue generators. I don't understand it, and I might get shot for saying this, but the IRS should have more agents out there. I mean, it makes sense, right, to keep everyone in compliance. Yeah. For those of you who are doing things a little right, but
hang on, before you get into that, I mean, there's been a bit of a political fight over this as well, right? I mean, who was it that put in that was going to beef up the IRS? Was that Obama or was that Biden? And then Trump, there's been back and forth about how they're going to increase revenue for the government by basically making an army of IRS agents. But isn't that gotten kind of caught up in the courts now? I mean, I don't know if you've been keeping up with that.
80,000 new agents that are going to come in over time, and maybe they can answer their phone. That would be the first thing.
That would be that would be a good start. Yes,
the IRS publishes statistics, and probably 10% of the phone calls get answered. The other people, they just keep you on hold for that long and whatnot. But and I do believe that these 80,000 agents, the first thing they'll be tasked with is going after this ERC thing, but that's a whole different ballgame. So, but anyway, so what is it that you're looking for in a income tax audit? It's the completeness of income recorded or reported, from revenues, from deductions and expenses. Are they legitimate? Is your revenue truly what you're reporting? Now, if you're using a CRM, an industry CRM, and you're using QuickBooks and you're reconciling your bank statement, most likely your revenue is going to be right. Obviously, if back in the day, everybody used to put cash in their pocket, people just don't spend cash anymore. Cash is just not really a thing anymore. Although, for those that do, let me just give you a pointer on how an audit can come about. So let's say that I have $100 that I deposit in the bank, and my chemical costs are 10%, right? And that's the industry average. I'm just making this up to keep everything. So let's say that now that 50% of the revenue is cash, and I put that in my pocket. Well, that 10% becomes 20%, right? And that's an immediate flag, right? So that, the cash isn't as big a thing as it used to be, but it used to be that they would kind of do just a gut check on things like that.
So I have a question, and this is more for our listeners too. I know the answer to this question, but I think it's important to say it. So first of all, if I had to do my own tax return, it would be a freaking disaster. Like, I think I could sign it maybe, but I mean, there's no way now. I feel like as a business owner, I'm not saying it's impossible, but I could not do it. I could not pull it off. Right. So you use an accountant who use someone else to do your return for you. And then something is discovered. Let's just say that, you misstated your income. Oh, you underreported this or whatever. Let's just say an accusation comes out from the IRS. Who's ponying up? Who's responsible in that case for the return?
So here's an interesting one. We as a firm, PCO Bookkeepers, if we screw something up, any penalties and interest we'll pay. You were going to pay the taxes anyway, but we'll take care of that. And most, a lot of firms will do that. So that's the way that. But if you forget to give me something on your, business return, I'm working on, and I'm using your QuickBooks, I'm using your CRM and payroll. So most likely we're not going to forget anything. But on your personal return, if you forget to give me an investment account, the 1099. I don't know about it.
I bring this point up because you're absolutely correct, right? In the case of PCO, and I'm going to give you a shameless plug here, and you can give me money afterwards, but you guys are you're very involved in the process. So it's not hard. Well, I should rephrase that. It's going to be difficult for someone to misstate something if they're following the program, right? If you are like, some people have this thing in their mind, like, well, I don't record this, I don't do that, and I don't really prepare my taxes. So if something goes wrong, I'll just blame X accountant. Doesn't work that way.
Well,
like at the end of the day.
So it's funny because, we've had several marketing agencies that we work with. And the first thing they do is go, oh, well, when you bring in your shoebox, nobody does that. Shoeboxes aren't really a thing, right? Everything is on QuickBooks from a business perspective, right? But your personal stuff, because you don't keep ledgers and things. But from a business perspective, I go into your QuickBooks and, obviously I want to substantiate things. Your revenue needs to tie out to your bank statements. If you're accrual based, it might not, but you've got to be able to reconcile to get there. Right. So that's
and one shameless plug here, because I'm just full of them today, but I will say this. And this is more of just a thing I've learned over the years. And Dan, you might disagree with me on this. I don't know. Years ago, probably about 10 years ago, I decided that I was going to run my household on QuickBooks and I was going to treat it like a business. And so legitimately, I run my personal finances on QuickBooks Online, and I have statements that are reconciled every month by a bookkeeper, and it's managed just like a business. And the reason I do that is because there's too much crap going on, right? And I can't keep up with it all. And I'm afraid, I do fear doing something like what you just said, like I'm misstate something, I forget something or whatever. That way, when it's return time, it's very simple, right? You pull the reports, everything's super clear. The books are tight, and I'm not doing some freaking, trying to figure out 3 different variations of what's going on when it's time to do the return. So I don't know what
you must be a joy to live with, but and I'm sure your wife is really happy about that too. But it's not a bad idea. I do the same. I all my personal stuff.
Yeah. Well, I only had to learn one piece of software. I don't want to learn anymore, because I used to use like Mint, and I used to use some of these other. Yeah, it was just like I just couldn't keep up with it. I'm like, you know what? I'm just gonna go to QuickBooks. I'll just pay the money. Whatever. I don't care. So anyway, I'm getting us off track. So let's keep rolling. Yeah.
All right. So that's revenue, right? So if the way an audit works is you usually, there's a statute of limitation for 3 years. An auditor will come in and say, I'm going to audit you for these 3 years, and they'll pick a sample period. They'll want to look at a couple of months, and they'll say, okay, show me all the revenues and show me your bank statements and whatnot, and they'll tie that out. If it ties out, great. If it doesn't tie out, they'll expand the audit. They'll expand the sample size to more months, or maybe possibly the 3-year period, or they'll do an interpolation whereby If you have a 10% error rate in 1 year, they'll apply a 10% error rate to all 3 years, just so that they don't have to go through it. You can say, well, I don't want to do that. I want you to audit all 3 years. So you have that choice. The other are deductions and expenses. And, there are certain things that, that are ordinary necessary for your business, the fuel, the chemicals, your advertising, your rent, whatever. But there are some things that are not so obvious, like, your depreciation. So a lot of people, your vehicles can be depreciated and your equipment can be depreciated. You can use accelerated depreciation, which gets you more of a deduction up front. And that's fine as long as you follow the rules. And then things like a lot of people have their office, they buy a building and they keep it in an LLC outside of it. And so, real estate, the building itself, the number of years that you depreciate things over could be 28, it could be, 40 years. So you don't get that much of a bang for the buck. There are, and these are totally legitimate, but there are companies, engineering firms out there that do these studies. And what happens is they say, well, your building is not really, all that money that you paid for, it's not for a building. Some of it might be carpet. Some of it might be.
These are called cost studies, by the way. I just had one done. Okay. Yep. Keep going.
So they break up the, they break up the, all the assets. So they're actually called cost segregation studies, right? So they're segregating the assets. Okay, this is a building, the walls are the building. So that is a 28 or 40 years or whatever. But the carpet, some of the things that wear out quicker, you can depreciate them. If you can show that their useful life is less than that, you can depreciate that over time. So,
okay, hang on. I got to have a little fun here.
Yeah.
If you are watching us on YouTube, great. If you're not, then you should probably flip over here because I'm going to make Dan turn red a little bit here. Let's have some fun. So let's talk about these deductions and expenses, because boy, do I see some liberties taken here. Let's talk through what you would consider to be over the line, close to the line, and well within the line. So things I've seen people do. Let's start with phones. Okay. So I've got a phone, family has a phone. It all ran through the business. That's something pretty small, but what do you say? On the line, inside the line, over the line?
Officially, you can't do that. Unofficially,
okay.
People do it absolutely.
Okay.
Phone,
so next one.
Not a big deal. Okay.
Phone. And not a lot of money. I mean, I don't think an IRS agent is going to run you off to prison over a Verizon account.
But you will add it back. But
yeah. Let's talk about vehicles, because this one is where it gets kind of fun. You've got which I would never do this. You've got the big monster truck, 4x4 diesel lifted.
Have you ever seen Donnie's truck, by the way? And if you ever met me, I'm not exactly the tallest guy. I needed a rope ladder to get into that stupid thing, but
by the way, I had lots of comments when I took Dan to the airport in my truck. But let's just talk about that, right? So you got a truck, and I realized, okay, there are service vehicles, and then there's vehicles that you drive. I know that's a funky line there. And by the way, I'm just having some fun here because look, at the end of the day, these are what operators are doing, right? What can I run through the business? And you should, right? I mean, absolutely. If it's legal to run it through the business, and why wouldn't you, right? I mean, you absolutely should. But it is kind of, you need to pay attention as to what actually is being ran through the business, because let's face it, the new deck, probably hard to justify that, on the P&L or that as a business expense. But so going back to vehicles, where do you personally I don't know. I'm going to draw the line on that one. Like, I don't know that that's like, is it $100,000, luxury car? Like, okay, well, we're not putting that on.
So you got to be careful, because there are limitations on personal vehicles, like on cars and things. But your trucks that have termite rigs and stuff, that's clearly. But, there's also a limitation on like SUVs, right? But I had somebody, have you seen this new Lamborghini SUV? So, I've had people, all right, well, you told me I should get an SUV. Well,
Yeah.
300,000.
Right.
So, that's where that falls. There's another thing for the convenience of an employee. If you let them take the truck home, and if it's just, for the convenience of you, then it's deductible. But if you're letting your truck out there for personal reasons, you have to W-2. It's still deductible. You still have to W-2. It's deductible as wages, right? So you have to send the employee a tax document that says that you've given them that.
And the operators
are doing that.
That's exactly what I was going to go to. I mean,
I've seen audits where it's come up. I've been involved with a lot of audits, and it's usually not a big item. I'll tell you where the big items are. The big items: travel and entertainment, 1099s. My college kid is an employee of
voice talent. So I will tell you from an operator's perspective, obviously Dan has the accountant perspective. This is an area where I've been very I don't know what happened. I'm not that smart of a guy. If you spend any time with me, you'll realize that early on, I decided I'm not going to mix business and personal, and I have them firewalled off. I don't share expenses. Now, do I run my phone through the business? Yes, I do. Do I run my truck through the business? Yes, I do. I do use it for business. I use the phone for business. So I'm not telling you that I'm I don't do anything, but what I am saying is this is something I don't mess around with.
If you have an airplane, why would you run that through the business?
Which I use for the business, just so you know, and I use for other purposes as well. But point I'm making is that this is just an area I decided I want to be able to sleep at night, and some people can do it no problem at all. I just didn't want to be concerned, oh my gosh, what if, if I get an audit and they decide all these things don't apply. And then so anyway, enough of that. Any more things with deductions and expenses you want to talk about before we go?
On the tax credit side, so ERC is, everybody's heard of that, right? But before ERC and concurrently, there are other credits that you can get. You can get research and development credits. I see a bunch of people who do irrigation talking about how they're researching water flow movement. Well, and they take them, right? So those kinds of things. There are job creation incentives. There are certain neighborhoods in disadvantaged areas where if you hire those people, you can get a jobs credit. So, that's an abused area. Does this guy really live in one of those areas where you're taking the credit? So those things, are big things. Worker classifications. So one of the first things that you do is consultants. If you have a line item called consultants, your IRS auditor is going to dig right in there. Who is this 1099 person? Well,
right.
If you send 1099 to PCO Bookkeepers because we do your accounting work, that's fine. But if you have a guy and when you're growing your business, you're just trying to do whatever you can to grow, to tread water. And so some guy who you think is the greatest thing since sliced bread, who's going to run your business, he says, well, but I want to be a 1099. And you say, yes, that's a problem. Right. So, and there are specific rules. Remember, we had Gene C. right on, and we were talking about what's a 1099, what's a W-2. So those are some of the.
And that definition is changing. You may want to pay attention to that. Yeah.
If door companies, listen up, because there's, we can probably do a whole episode on that. Session on that.
Yeah. 100%.
So that's one of the things. Now.
So hang on. So deduction and expenses, and then tax credits and incentives. Just these are areas that if you want to sign up for an audit, start abusing these areas, or I shouldn't say sign up for an audit, but the reality of it is that if you start getting out of line, I mean, for me, the deductions and expenses, yes. And when we talked about that earlier, tax credits and incentives, here's what I'll say. I'm a big picture guy. And if I am going to go and, do one of these credits, you're almost you have to look at it from a big picture perspective. Okay, is the potential reward worth the risk of someone going through the entire business. Is this $30,000 that I might potentially save or whatever? And it might be, right? I mean, it may be that it absolutely makes sense to you.
But you got old time accountants who want every penny.
Yeah.
They're gonna get you to do all this stuff. And listen, the R&D for the irrigations, I thought that was kind of creative, but there's a bunch of guys who are doing it, right?
Yeah. So point being is that if you're going to delve in that realm, you better make sure that you got all your hatches battened down and ready to go, because it could very well turn into being something that you traded pennies for dollars. Yeah. You know what I mean? Like, or should I say you traded dollars? I mean, it just legitimately, you're going to get your punishment, or, the potential downside of it is going to be so severe it was not even worth, which is one of the reasons. And by the way, I'm not judging anyone here. One of the reasons I stayed very away from the ERC credit. I'm like, it's just what we could potentially get out of it versus what it could potentially turn into. Just didn't make sense to me. Now I know I was going to say, I've seen folks who've done very well with it, and they may be, and it may be great. Just for me, it was just like, I wasn't willing to go there. So, all right, next audit. Let's keep rolling.
Next one. So payroll. If you're using a payroll company, most likely everything's going to work out. But one of the things that we see is that companies that run into cash flow problems sometimes tap their payroll taxes and say, I'll pay it later. That is one of the worst things that you can do. That and that sales tax, trying to hold on to that money longer than you should. So an income tax audit, you basically declare how much you make. So the government, there's a give and take. Payroll taxes, that's not your money. It never was your money. And the penalties are brutal.
I have a story here, Dan, I need to tell. This happened many, many years ago. This was before I started Triangle. But if you were in the Raleigh area and you were around probably 20 years ago, I know you know the story. So there used to be in Raleigh, there was this big payroll group called the Castleton Group. Did you ever hear of them, Dan?
But are you telling me they absconded with all the payroll taxes?
So here's what happened. Yeah. So at the time I worked for a startup and I was writing software. And so it was a fun job. We'd work like crazy hours Monday through Thursday. And then on Friday, we just shut off the curtains and played Doom all day. But anyway, that's a whole nother story. The video game. But the rep for them, the guy, I couldn't stand the guy. He was such a putz, but he would come in and they were doing our payroll. And somehow, some way, we ended up switching companies. Fast forward 2 years, and the IRS came in and shut them down. And as it turns out, what they were doing was they were doing everyone's payroll, collecting everyone's payroll taxes, but was not actually paying the IRS their payroll taxes. And guess who got stuck with the bill?
Yes,
the client, the company did. That's 100%.
And oh, by the way, I hear all these times when we're going for a new client. Who's your payroll company? Oh, it's a local guy. The local guy. You got to make sure. So, like an ADP or a Paychex, I know they're difficult to deal with, or a Heartland or something, but they're not. They're not going to divert your payment.
You're going right to the point I was going to make. You're going right.
I have seen several payroll companies go under, and when they start to go under, they take
the payroll taxes. Yeah. So that's the point I wanted to make here, is that if you're using the local guy and you guys are buddies and you go to church together and yada yada, hey, that's great. Ask for 941s. Ask for physical evidence that, your payroll taxes got paid. Number two,
TPS, that make sure that they prove that your payroll taxes are paid, because we've seen it where, and by the way, you could probably get out of the penalties because it's not your fault and you depend.
You won't get out of the tax.
You can't get the tax. Mm-hmm. It's your responsibility. And same with the interest. So.
There was a massive uproar after they went out, because literally several businesses in Raleigh went out of business because they could not afford to pay all the back taxes. And so my point out of telling that story is that use a big, for us, we use Paychex. I don't mind name dropping. They're not great. I put payroll companies in the same category as I put uniform companies. They all suck. It's who sucks the least, right? And so I would say go with a larger company and just be aware that no matter who processes your payroll, you're responsible for paying your payroll taxes, period. Dot. So
That's right.
just be aware of that.
And remember, you're like with income taxes, you disclose to the government how much you're making, and you pay the taxes off of that. Payroll taxes, never your money. You withheld it from your employees, so they're coming after you. Same with sales tax, right? You charge your customers. Don't be withholding that. And I know in some states, pest control or lawn care is not a sales taxable thing, but along with sales tax go use tax. A use tax is you paying the sales tax. So let's say you're buying products out of state and they're shipping them in, and maybe that company who's selling you does not collect taxes. You don't really have a problem with Amazon and when
they fixed that,
but because they're licensed in every state. But there's something called nexus, and what nexus is it's having presence in a jurisdiction, right? So if you have nexus, you might have a salesman or a technician or whatever in that territory. Now you have nexus and you have to file in that area. One of the things that we used to see and still see is companies from New Jersey will drive into New York City with the address on their truck, and they have agents running around the they have agents running around the city looking for out-of-state businesses. You can tell that we are live. Hold on a second. My dog is there's a helicopter outside. Hold on.
Well,
Yes,
while he's having fun, I was going to say, while he's having fun with his dog, the sales and use tax audit for me personally, when I went through all the audits I was talking about at the beginning of the episode, this was the one that I actually owed money on. And the reason is, and this has been a while, I mean, I'm going to date myself when I say this, but it used to be when you did online purchases, you could get out of the state tax because they would sell them from different states. They would not charge tax and you could get away with it. They closed that loophole. And then the very first thing the auditor said is, I want your bank statements and I want to see all your online purchases. And that's exactly where he went, he went right to, I think this is, for the most part, this has been everyone's kind of fixed it and it's not a big issue anymore, but it is one that we got popped on.
It's still
an issue.
Like, so Amazon or, some of those big companies that are registered in every state, they're collecting the sales tax. But if you order from some, smaller company that's halfway across the country, they're probably not registered in your state. That doesn't mean they can't sell to you. However, you have to pay the sales tax, and they call that use tax, right?
Yeah.
And so that's, when you get that notice, and if you're in a state that our services are taxable, it's going to be a sales tax audit. But somebody like, in a state that, our services are not, they say, oh, geez, what kind of a sales tax? That they're looking for a use tax, right? So are you buying product or, desks, furniture, whatever from out of state that's coming into states, and they will mail you that? That's right. A big one, right?
Yeah.
Let's see, the exemption certificates. If you're in a state where your services are taxable, which is most states, but there are some states where pest control and lawn care aren't. But if you're doing work for churches or schools or some other exempt organization, you have to have a certificate in your file, because if you're not charging them sales tax, then you have to have proof of it. Now, during an audit, they'll usually give you some time to come up with those exemption certificates. But if you did that work 2 years ago and that customer of yours is no longer around, well, that's going to be a tough one. Okay. So, well,
hang on. Before you move on, there's something I do want to say here, which is for those who are in a state, like in North Carolina is one of these states, we have a service tax. The pest control industry is exempt from that. However, not all services that pest control companies provide are exempted. So you better pay attention. If you're in a state, and I have a friend right now who's dealing with this, is that he does other services other than pest control, and that was deemed as sales taxable. And now he's got a big show on his hand, and I won't add the front word to that, but we all know what I'm talking about. And now it's like, is this huge deal because it's like, well, you owe tax. And it's like, well, no, pest control. And so there's this big gray area. And when I was president of North Carolina Pest Management Association, we fought this tooth and nail. And I actually met with the head revenue guy in our state, and we went through it, and it ended up being, you know what the answer was?
What's that?
Depends on your auditor.
Yeah. So it's funny because once a company gets audited and they make a bunch of money, then they target the industry. So we have a situation in Massachusetts right now going on, because if you buy restricted use pesticides, they're not taxable, right? For on use tax. But if you buy things like bait stations and non-restricted use pesticides, those are, right? And so that's a big deal. So we're working with a bunch of companies in Massachusetts. I'm working on crawl space encapsulation, North Carolina. That is a problem right now.
Oh yeah.
And you're be prepared, because that's coming.
It absolutely
just make
is.
sure that you're paying sales tax or use tax on the materials that you're buying. North Carolina is going to be all over.
Well, and the problem is that at least in this state, and I put this disclaimer out is because it's a gray area. And like most things where there's a gray area, like I would much rather it be like all services are taxed or all services are not taxed, because when you have this split, that's when you really get in trouble. And so I would just say, if you're in a state where it's split, you might want to look at your service line and just pay attention, because it absolutely could turn into an audible thing and, an auditable item, and it could not go your way. I've seen it's happening right now in our state. So
it's definitely happened. We're working on a couple in North Carolina, and Massachusetts is a total S show too, because of this restricted versus non-restricted pesticide. And when they start to target an industry,
it's right. It's all it takes is one to kind of start the avalanche, and then they're going to go and start looking at everyone.
The other one, which is kind of interesting, is they call it sourcing rules. So you might be in one of these states, like Washington State or New York, where you have all these multiple sales tax jurisdictions within the state, right? So a lot of people think, oh, well, my business is in this town, so all the sales tax is, chargeable to the rate at that town. Well, no, that's not right. Where your technician performs the service, that's where it is. So like in New York and Washington, you have, 50 different jurisdictions that you have to keep track of. And your CRMs are, pretty good at if you set it up right, at calculating all this, but you have to do that. But these sourcing rules are if you don't source correctly when they come in, then they'll try to recalculate things and figure out, where the services have been performed. So sales tax audits and use tax audits, those I would say are probably the state's biggest source of revenue. The federal government, obviously, it's income tax. The payroll tax audits, you only see that when a company's running into trouble and tries to use their payroll taxes as working capital. That's not a good thing. Occasionally, you'll have misclassifications, 1099 versus W-2s and things like that. And then we talked about the income tax audits, travel and entertainment, 1099s, that kind of thing. So those are the three kinds of audits that are most, that are most likely. Those are the areas of exposure that you look at.
The thing I would add to what you just said there, Dan, again, I don't know why I'm in a mode of plugging you today. I don't know. As an owner, right? As an owner, you need to just step back for a moment and just do a little risk management and just understand okay, do I really want to get into this game of where I'm going to shave every little penny, and is it really worth it? And the reality of it is that I'm sure most of you are thinking absolutely not. Find someone that can look at your business from a holistic perspective, not just because you think about it, even a company that just does your return and nothing else, they really need to be more plugged in than that. They need to understand what's going on, because it's very easy for something to slip through. it's one of the things I like about PCO, right? Is there's a big, I mean, they've been doing your books the whole year. They've got a system that's set up. They already know, and they're going to give you some good info along the way. And again, it's a shameless plug. Again, it doesn't have to be PCO. Obviously, that's who I use. That's who I think you should use. But the fact of the matter is that you need someone along the way that understands the story before you make the declaration, if that makes sense. And I would not, as an owner, this is just not an area that's worth it to me. You know what I mean? Like the
other thing is like doing all the research on these.
It's just like, it's not worth your time.
So you spend more time on sales, making money. However, once you get big enough, like if you don't think that Amazon or, these companies don't have whole departments who are just figuring out ways around the tax laws, that's great. But as a small business person, your time is better spent figuring out how to increase sales and efficiency rather than trying to find tax credits for hiring people out of the inner cities who may or may not be good for your business.
Yeah. And you're just going to make a lot more money.
Commentary. That's just
it's just reality. Yeah. You're going to make more money. You're going to find way more money selling more and get more efficient than you are in some, obtuse like regulation somewhere that's going to, give you an extra $5 or $6 grand. It's just not worth it. But all right. Anything else you want to add here for auditing, Dan? I tried my best not to get you too uncomfortable in asking you some risque questions, but
I just use you as a
as a poster child. Goodness.
So
all righty.
I think that's it for today.
All right. Well, just a reminder that
else?
No, I don't have anything else. I mean, again, I said what I needed to say, which is just, find someone that, that knows this stuff and just have them take care of it. And the main thing is don't spend your time screwing around with this stuff. It's just not worth it. I mean, the main thing is use the bigger companies, use someone that can do your return, that knows the bookkeeping and then, can put it all together for you, and then just move on, right? Go and like start selling more, start, figuring out ways to leverage your CRM more. I mean, go find money in other places, because this is certainly not one area that you want to screw around with just because of the risk that's involved. And so with that, just a reminder that all the resources and topics that we talked about today and in all of our episodes are available on our podcast website, pmpindustryinsider.com. Take a look under show notes. And as always, if you enjoyed the show, we appreciate any kind of rating and review that you can give us. We're up on YouTube. We're on Spotify, Stitcher, Apple, yada, yada, yada. If you have complaints, concerns, or if you just outright want to just bitch at someone, Dan's email address is available, and we'll also give you his cell number. And with that, we're going to run on. We'll talk to you all next time. Take care.
Sounds good. See ya.
Bye-bye.